Question 1. What type of premiums does an indeterminate whole life policy have? Answer: adjustable premium. Question 2. Which of the following life insurance policy provisions limits the amount of time an insurer has to challenge a claim and void the contract upon proof of a material misstatement? Answer: incontestability provision. Question 3. Life insurance protection for a specified period of time is provided by what type of policy? Answer: term life insurance. Question 4. Which rating classification is typically used in the senior marketplace so that policies can be issued without a medical exam? Answer: graded lien plan. Question 5. Which of the following is true regarding disclosures and issues relating to AIDS? Answer: insurers may refuse to issue a policy to individuals with positive HIV test results. Question 6. Replacement rules protect the interests of consumers in Washington through all of the following, except. Answer: guaranteeing the payment of claims in the event of insurer insolvency. Question 7. Which of the following statements regarding life insurance policy exclusions is correct? Answer: aviation is excluded, except for fare-paying passengers on a commercial flight. Question 8. All of the following are correct regarding key person insurance, except. Answer: the policy primarily protects the employee's retirement plan. Question 9. All of the following are considered material to issuance of a life insurance policy, except. Answer: age or gender of the applicant. Question 10. When an insurer requires that an insured be subjected to a medical examination, who pays for the medical exam? Answer: the insurer. Question 11. An applicant's signature on an application indicates what? Answer: that the applicant's statements are true. Question 12. A person applying for insurance for themselves or someone else is a. Answer: applicant. Question 13. The period of time over which distributions of the accumulated balance are made to the annuitant is referred to as the. Answer: annuitization period. Question 14. A 1035 exchange of an existing life insurance policy or annuity contract may be beneficial because it would allow the owner to. Answer: seek higher returns, lower costs, and/or increased benefits. Question 15. The annuity. Option selected can provide a temporary or lifetime payment. Answer: settlement option. Question 16. Under Social Security, a worker needs 10 years of work to be considered insured. Answer: fully insured. Question 17. How long does a non-resident producer have to notify the commissioner after moving to another state? Answer: 30 days. Question 18. Has the right to change the premium mode? Answer: policy owner. Question 19. Which jurisdiction has the power to issue rules and regulations to help enforce insurance laws? Answer: the commissioner, superintendent, or director. Question 20. The premium charged for new policies obtained by exercising the guaranteed insurability rider is based upon. Answer: the insured's attained age. Question 21. H has an annuity funded with pre-tax dollars. So far, H has invested $10,000 in the policy, which is now worth $25,000. If H cashes out the annuity, how much is taxable? Answer: $25,000. Question 22. An insurer issued an insurance policy in Washington that allows the insurer to change rates or policy terms in the middle of the policy period. If the insurer makes a midterm change, the insurer must: Answer: provide 45 days advance written notice. Question 23. All of the following are true of a universal life policy, except: Answer: any borrowing or partial withdrawal from the cash value account terminates the policy. Question 24. L uses their dividends from a participating life insurance policy to purchase additional single premium permanent benefits at L's attained age. Which dividend option is L exercising? Answer: paid-up additions. Question 25. What provision describes the parts of the life insurance contract? Answer: entire contract provision. Question 26. All of the following annuities can be sold without a securities registration or license, except: Answer: variable annuities. Question 27. When payouts begin, what type of income plan reduces the account balance and could eventually decrease it to zero over time? Answer: capital liquidation plan. Question 28. Q has a $100,000 traditional whole life policy with $30,000 of cash values and a $10,000 loan outstanding. What is the maximum additional amount Q could borrow from the policy at this time? Answer: $20,000. Question 29. All of the following are characteristics of a 403(b) plan, except: Answer: employees of corporations participate. Question 30. K, a producer in Washington, has distributed information to their clients that is false and designed to injure another insurer. K is guilty of which unfair trade practice? Answer: defamation of insurer. Question 31. A consumer should know the following aspects of a group insurance policy, except: Answer: upon separating from the group life coverage is not convertible. Question 32. To purchase the greatest amount of coverage for the least amount of initial premium, a client would purchase which of the following? Answer: a term policy. Question 33. Jill wants to know how much to put into her annuity in order to receive the greatest benefit payment amount. Which of the following will provide her with the largest monthly income regardless of the settlement option selected? Answer: $1 million. Question 34. Which of the following is not a type of term life insurance policy? Answer: variable term life. Question 35. If no money is involved when the ownership of a policy changes, this is referred to specifically as a: Answer: absolute assignment. Question 36. The needs analysis approach determines the need for life insurance coverage based on an individual's: Answer: immediate death needs. Question 37. The only person allowed to make an insurance contract in Washington on an unauthorized insurer's behalf is a: Answer: surplus lines broker. Question 38. The advantage of an insurance-funded buy-sell agreement is. Answer. It is a legally enforceable agreement that provides the funds to transfer the deceased's business interest. Question 39. When reviewing an application, the underwriter decides to reclassify the risk. What does that mean for the client? Answer. The premium could increase or decrease. Question 40. Who receives the endowment value of a whole life policy? Answer. The policy owner. Question 41. The face amount of a traditional whole life policy remains the same as the cash value increases. The amount at risk for the insurer. Answer. Decreases. Question 42. Which of the following best describes a statement of good health? Answer. It verifies that the insured has not suffered a serious illness or injury since the application date if the premium was not paid at the time of application. Question 43. If a life insurance beneficiary is designated as irrevocable, all of the following actions require the irrevocable beneficiary's approval, except. Answer. Changing the mode of premium. Question 44. All of the following are considered specialized policies, except. Answer. Whole life insurance. Question 45. Susan, age 65, inherits a substantial sum of money and wants to have the money distributed to her over the rest of her life starting next month. Which product offered by the life insurance industry will allow her to accomplish her objective? Answer. Single premium immediate annuity. Question 46. Both parties must perform certain duties and follow certain rules of conduct to make this contract enforceable. This contract is known as. Answer. A conditional contract. Question 47. F is the policy owner and insured of a life insurance policy. F names G as the primary beneficiary and Z as the contingent beneficiary. After G dies, F names M as the new primary beneficiary. Upon F's death, who receives policy proceeds? Answer. M, the new primary beneficiary. Question 48. What is the maximum duration of a temporary producer license issued by the Commissioner? Answer. 180 days. Question 49. All of the following are true regarding a variable annuity, except. Answer. The number of annuity units received upon annuitization and the unit value remain level. Question 50. Which of the following life insurance riders can be used to cover the life of an additional insured who is an unrelated business partner? Answer. Non-family rider. Question 51. Which person or entity issues a certificate of authority enabling an insurer to conduct insurance business within a particular state? Answer. State Insurance Commissioner or Director. Question 52. Which annuity has its income benefit payments related to an assumed interest rate or heir? Answer. Variable annuity. Question 53. If the policy owner can withdraw funds from an annuity without surrender charges in the event interest crediting rates fall by more than a specific amount, this is referred to as a. Answer. Bailout provision. Question 54. J is the insured, and their spouse, M, is the primary beneficiary. Their 3 children are the contingent beneficiaries. J and M are killed in a common accident. The proceeds of J's policy would be paid to. Answer: the children. Question 55. Which of the following statements is true regarding fixed annuities? Answer: upon annuitization, the annuity payments are level. Question 56. What feature do some traditional whole life policies offer to keep the policy in force if there are sufficient cash values? Answer: automatic premium loan. Question 57. Are finds that they are no longer able to pay premiums on their $50,000 whole life policy, but they still need that amount of protection for their family. Which non-forfeiture option provides this protection? Answer: extended term. Question 58. What type of annuity is designed to start benefit payments many years from now and subjects the owner to investment risk? Answer: deferred variable annuity. Question 59. If an insurer accepts an overdue premium payment and continues the policy uninterrupted, this is an example of. Answer: waiver. Question 60. Which of the following is considered a partial withdrawal from a life insurance policy? Answer: a partial surrender. Question 61. If a policyholder chooses to convert their convertible term life insurance policy, what happens? Answer: the term policy will be replaced by a permanent life insurance policy. Question 62. Statements made by the applicant on a life insurance application are considered to be. Answer: representations. Question 63. For a universal life insurance policy, the premium is waived through a. Answer: waiver of cost of insurance rider. Question 64. What is the correct term for a contract written by one party without input from or negotiation with the other party? Answer: contract of adhesion. Question 65. The transfer of some or all of the financial risk of loss from one insurer to another insurer or insurers is best described as. Answer: reinsurance. Question 66. Which life policy settlement option pays only for a specified period, regardless of who may receive the payments? Answer: fixed period. Question 67. Under group life policies issued in Washington, producers must provide certificates to each individual insured stating all of the following, except. Answer: the beneficiaries and their relationship to the insured. Question 68. C has a traditional whole life insurance policy worth $100,000 with a cash value of $30,000. C borrows $10,000 from the insurer as a policy loan. All of the following statements about this transaction are true, except. Answer: if C were disabled, the beneficiaries would receive $70,000, less any outstanding interest charges. Question 69. All of the following life insurance policies have cash value that increases based on deposits by the insurer, except. Answer: variable universal life. Question 70. In the state of Washington, a resident business entity acting as an insurance producer is required to obtain. Answer: an insurance producer license. Question 71. The ____ period keeps a policy in force for a short time after the premium due date, allowing policy owners a little extra time to pay an overdue premium without a lapse in coverage. Answer: grace period. Question 72. P is a policy owner and insured under an ordinary life insurance policy. P names Q as the primary beneficiary and R as the contingent beneficiary. After a major accident, Q dies, and a few weeks later, P dies from an illness. Which of the following receives the life insurance policy proceeds? Answer: R, the contingent beneficiary. Question 73. Which contract type allows the policy owner the right to cancel the policy at any time for any reason? Answer: unilateral contract. Question 74. A partial withdrawal is permitted on which of the following policies? Answer: universal life. Question 75. An insurer authorized to do business in this state is known as? Answer: an admitted insurer. Question 76. What life insurance provision establishes that, if both the insured and the primary beneficiary die in the same accident and it cannot be determined who died first, the insured will be presumed to have survived the beneficiary, and proceeds will be paid to a named contingent beneficiary of the insured or to the insured's estate? Answer: common disaster clause. Question 77. Insurance coverages that cannot be obtained from any authorized insurer in a state. Answer: may be purchased from an unauthorized insurer as surplus lines. Question 78. In Washington, life insurance policies may be issued to associations following all of the following rules, except? Answer: it has at least 25 members. Question 79. A resident insurance producer licensed in Washington places insurance with insurer XYZ, even though the producer is not appointed by the insurer. Under the Washington Insurance Code, the producer? Answer: must maintain a bond to the benefit of the people of Washington. Question 80. In order to represent an insurer during an insurance transaction, a producer in Washington must be? Answer: appointed. Question 81. Licensees in Washington seeking to renew their licenses may only complete a continuing education course with the same course number once every how many years? Answer: 4 years. Question 82. All of the following actions would cause the commissioner to revoke, suspend, or refuse to renew a producer's license, except? Answer: knowingly accepting insurance business from a licensed person. Question 83. After receiving the required proof of loss related to a claim under an insurance policy issued in Washington, the insurer must accept or deny the claim within? Answer: 30 calendar days. Question 84. According to a provision required for all life insurance policies issued in Washington, insureds may borrow up to the cash value of the policy after how many years of full premium payment? Answer: 3 years. Question 85. Insureds in Washington who accept a prohibited rebate of premium will be liable for a fine of up to? Answer: $100. Question 86. A person must complete a one-time course in annuity suitability before being allowed to sell, solicit, or negotiate the sale of any annuity product in the state of Washington. How long must the course be? Answer: 4 hours. Question 87. Under what conditions, if any, may an individual that is not licensed be compensated for the sale of insurance? Answer: if the individual was licensed at the time of sale and receives deferred commissions while unlicensed. Question 88. Which of the following statements regarding the handling of premiums in the state of Washington is correct? Answer: premium account records must be maintained for 5 years. Question 89. How many days do licensees have to reply in writing to an inquiry of the insurance commissioner about their business? Answer: 20 days. Question 90. When suspended by the commissioner, licensees must surrender their license certificates to. Answer: the Commissioner of Insurance. Question 91. In Washington, preserving the integrity of the business of insurance is the duty of which of the following? Answer: the insurer and the insured. Question 92. In the state of Washington, for how long is a business license valid? Answer: 2 years. Question 93. Under an employee group life insurance plan in Washington, how many employees must be covered at the date of issue in order to be valid? Answer: 10 employees. Question 94. All of the following statements regarding license renewal are correct, except. Answer: a producer's license is not terminated until 60 days after the license expiration date. Question 95. A licensee improperly withheld premium amounts received in the course of doing insurance business. In addition to suspension, revocation, or non-renewal of a license, the commissioner may fine the licensee up to how much per offense? Answer: $5,000. Question 96. A consumer in the state of Washington would like to replace their existing life insurance policy. To be considered a replacement transaction, the producer would need to know that any of the following was occurring to the existing policy, except. Answer: the policy had been pledged as collateral or borrowed against for over 25% of the loan value. Question 97. Resident producer applicants in Washington must meet the following conditions, except. Answer: they must be at least 21 years of age. Question 98. When handling certificates of insurance in Washington, a person may do which of the following? Answer: demand a certificate of insurance be issued to show evidence of the coverage provided by a policy. Question 99. In Washington, disclosure rules are there to help a buyer's ability to. Answer: select the most appropriate life insurance for their needs. Question 100. The owner of a variable life policy may allocate the premium into a subaccount. This subaccount is also known as the. Answer: separate account.